Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. The biggest market story this year is the rise of world's most valuable technology companies, and that's thanks to the AI bonanza. And therefore, one of the most pressing questions for investors now is, will the Magnificent Seven continue their rally in 2024? And I have the perfect guest for this topic. I couldn't think of a better guest. So I'm thrilled to welcome back on the show tech guru Gene Munster, who is managing partner at Deepwater Asset Management. So we're talking about the outlook for tech, both big tech and emerging tech, and an emerging tech ETF that Gene manages. Gene, thank you so much for coming back on the show.
It's so fun to be back here. And what a great topic. We're just getting started when it comes to AI. And this is the gift that we'll continue to give for investors over the next 5 years. But of course, you got to figure out where to invest, which of those companies to invest in. But an absolute pleasure to be here.
You're right. These are exciting times. So let's start with Nvidia, which currently holds more than 85% of the market for generative AI chips. Shares are up more than 240% this year. But the stock has taken a breather since topping $500 in August. And despite this eye-popping surge, Nvidia's valuation is actually now more attractive because the company is growing so fast and estimates have been going up so much. Earlier this month, AMD introduced its newest AI chips that could provide some competition to Nvidia's AI chips. So can the surge in Nvidia shares continue in 2024? And what do you think of competition for Nvidia?
So I think the stock can continue to move higher in 2024 because I think that all eyes will be on the 2025 revisions to numbers. And just to put it in a context, is Nvidia obviously has been growing quickly. That's an understatement. They'll likely grow revenue at 200% in the current January quarter. They got kind of an odd quarter. And the expectation is that growth rate declines to, call it 50% for calendar 24 and about 15% for calendar 25. And so next year, this is all about investors, especially in something like Nvidia and some of these tech companies are looking more further out. Typically, an investor will look 6 to 12 months out. In the case of some of these larger tech companies and the small ones, it's 12 to 24 months they're looking out. So next year, it's all about 2025 and what ultimately is that growth going to be and how the expectations change around that. And as I mentioned, the expectations for 15% growth, I think that they will exceed that. And it is hard, by the way, I just want to acknowledge, to grow 15% after growing 300% and 50% in the previous 2 years. That is a remarkable feat. I think that they can do it. And the reason I think that the amount of spending from hyperscalers is going to be that significant. And I think on top of that, hyperscalers, of course, are the largest tech companies, really the Magnificent Seven and the ones that are doing these cloud offerings. On top of that, you're going to see more mid and smaller companies starting to purchase these GPUs from Nvidia. And so I think that the bottom line is that I think that they're going to grow at faster than 15% in calendar 25. I think that realization will happen in 2024. And I expect shares of Nvidia to move up in anticipation of that. Now, I want to caution is this is not investment advice, but just to put it together, as I see next year a 20% type of upside in Nvidia when you kind of put all these pieces together. You also mentioned competition and AMD, and this is something that we're obviously looking a lot at, not only what AMD is doing, but also related to Intel and their recent announcements. And the simple takeaway is that even though there is more competition coming, the substance of the value that Nvidia is providing is still outpaces what Nvidia and Intel offer. And so I suspect that that they will continue to do well. They will lose a small amount of share to Nvidia, to AMD next year. But the market, I think, is just going to continue to grow. And again, I think that Nvidia is going to hold the vast majority of market share when it comes to these critical GPUs.
So let's talk about two other technology giants which are at the forefront of AI race. And Google has been investing in AI for years or decades, and it was earlier seen as an AI leader. But it seems company has taken a rather cautious approach to this technology, and now they are being forced to play catch up to OpenAI's ChatGPT, and their recent rollout of Gemini was also a little bit messy. So as of now, it appears that Microsoft has emerged as an early winner in AI race. But this technology, the trade is just starting now. So this race is going to heat up next year. Who will emerge as a bigger beneficiary in your view?
I think the biggest step function in terms of how the market and the tech community realizes who's adding the most value around AI, I think that the biggest step function is going to come from Google. Gemini, specifically Gemini Ultra, this new foundation model that they've shown is they showed a bunch of videos on it. The videos did have some editing to it, so you need to take the videos with a grain of salt. But the substance of what they showed was impressive. And it is what I view as the most advanced multimodal generative AI. Multimodal means the ability to talk to the generative AI in ways that a human would talk to another human. Sometimes that's through text, sometimes through voice, and sometimes through images. Now, GPT today, GPT-4, does have the capability to do some multimodal. So I want to make that distinction clear. But I think what Gemini Ultra will show sometime next year, as I think it's in the first half of next year, will be an eye-opener for the marketplace that Google is making significant progress when it comes to this foundation model. I think that this also will be somewhat of a leapfrog exercise, because eventually next year, OpenAI is going to come out with ChatGPT 5, and that will probably be a little bit of a leapfrog over Gemini Ultra. And I think the best way to really assess what's going on with these foundation models, and there's about 5 of them that are out there, is that it's really the key is which 2 or 3 are going to be the leading models. And in the case of Google and their efforts, I think 2 months ago, the market was unsure if they were going to have a model that's in the top 3. And I think after what they have previewed with Ultra, I think it's more clear that they're going to have one of those top 3 models. And so this cat and mouse game, leapfrog, this is going to continue when it comes to the features on these foundation models. But at Deepwater, we do own Google. And one of the reasons why we own it is we believe that they're in a great position relative to their foundation AI models, and Gemini specifically.
So we haven't heard much from Apple, the world's biggest company, on generative AI this year. So the company has some catching up to do. And recently they paused sales of Apple Watch also due to a patent violation ruling. And then there are some China-related concerns. What do you think of Apple next year? Do you think we'll hear some more announcements on generative AI from Apple in 2024?
The simple answer is yes. I expect them to talk more about generative AI. And the knock against Apple is they really haven't said much about AI. In their prepared remarks and their conference calls this year, where most of the big tech are talking about AI, mention it 20, 30, 40 times during their prepared remarks, Apple hasn't mentioned it at all. It does come up in the Q&A. In the most recent quarter, Tim Cook mentioned on a question related to what are you doing in generative AI? He said, and I'm quoting here, "We obviously have work going on, and you can bet we're investing quite a bit and going to invest responsibly," and end quote. And that last piece, or the 2 pieces that jumped out to me, and is that they have a lot of work going on. I think that is noteworthy. And second is they're investing responsibly. And in November, Tim Cook was on a podcast called At Your Service. And he mentioned the importance of that we need to have rules of the road and some governance around AI. And I think what all this means is that when Apple does do more with generative AI in 2024, it's going to be, I think, a light version of it relative to what we're going to see with Gemini Ultra, and with ChatGPT. And I just want to kind of fill in the blanks a little bit. When we say Apple's doing something with generative AI, what form does that take? And most likely it's going to take the form of Siri. And I envision them at some point, likely in June at their developers conference, to announce Siri has new lexicons, new conversation pieces that you can do that are more of an interactive generative type of experience. And I think that that's kind of an early step. And for those who are a little more technical on the AI topic, I don't expect Apple to have a foundation model in 2024. Eventually, 3-5 years down the road, I think they do have they do have one of the key 5-6 foundation models out there. But this next year, it's more about them kind of making Siri more conversational, driven by an open sourced AI model that they're using, something like Llama, for example. So for Apple investors, I think that this is something to look forward to. Just if Apple does just simply talks more, even shows a feature like a Siri powered AI, I think that would be positive for the stock. And I would, before we leave the topic of Apple, I think the AI piece is front and center. I think there's another important conversation just related to what happens with Vision Pro. This is going to come out probably in the first quarter of next year. Of course, this is their new spatial computing headset. Most people are pretty reserved. Most investors are pretty skeptical about what the impact could be. And when I demoed this back last summer, I was impressed. And I've seen a lot of these mixed and augmented reality headsets, and I would say this is just a step function different. And I think some of the features, especially initially around spatial video, it's mesmerizing to watch your memories in spatial. It probably doesn't seem to make a lot of sense. I would just say, if you get an opportunity to try out what it looks like to see videos in spatial video, I think you'll get it. And I think that eventually, 3-5 years down the road, is that Vision Pro will be a more material part, 10% plus of Apple's overall revenue.
Definitely a lot to look forward to. Now, next on my list is Tesla. And I wanted to discuss Tesla's recent recall of 2 million vehicles. It was called a recall, but it was more like a software fix over autopilot issue. And then talking about the other companies in this space, GM's Cruise unit, they announced that they are laying off 25% of the workforce after a series of accidents and these safety concerns. Waymo, which is Google's self-driving car unit, has been operating in Phoenix for a few years. And in fact, I took a couple of Waymo One rides in Phoenix recently. It was amazing. It was amazing because I was so excited about the technology. I felt absolutely safe.
That says a lot.
Yeah. So in your view, what lies ahead for Tesla and also the future of self-driving cars?
So maybe start with the future. This is a topic that is near and dear to me. I live next to a highway that has about 100,000 cars go by every day. And what you hear on the highway is a reminder to me of how dangerous cars are. Last year, 43,000 people lost their lives in the U.S. in car accidents. I think that this is something that, even with our better safety technology, the reality is humans are just much more distracted. And I think that that safety principle alone should be justification for lawmakers to open up and allow autonomy to move forward and the development from tech companies to do this. So that's the big picture. Said another way, it's a function of time before finally the logjam breaks. In the near term, the autonomy step forward autonomy has taken a step back. And you mentioned what happened with Cruise. in the case of Google and this 2 million recall, I think it's pretty comical to call it a recall, like you said, as a software update. But essentially, it's going to allow their autopilot, which is different than FSD, but to have more notifications, or they're referred to as nags, to remind you to pay attention when you're using autopilot. And that's kind of a predecessor to full self-driving. But in general, you're seeing NHTSA, the National Highway Safety Organization, putting more pressure on Tesla to really get people to not use some of these technologies, even though they're safer by some measures, 7 times safer. That's a Tesla metric, 7 times safer, a car running with autopilot. So I think it's taken a step back. But I think I somehow saw a glimmer of positive news come out of this NHTSA and what happened with Tesla. And NHTSA and Tesla have been just locking horns for the last couple of years. They're not seeing eye to eye. The fact that they have now had some resolution on a topic, I think, is generally positive. They're showing that they can work together. NHTSA, the chairwoman, is going to be stepping aside her mandatory. She's required after 2 years to release her position. Unsure who the new person is going to come in and what their response to this is going to be in autonomy. But in general, I'm still in the camp that probably 2 to 3 years from now, we're going to have an AI breakthrough moment with autonomy. And I think it's winner take most. I think we're going to have probably in the West 1 or 2 of these autonomous models that are really going to power most cars, and they'll just license that technology. And I think Tesla's going to be one of them.
Great. Now, looking at the year-to-date performance, Nvidia, as I mentioned earlier, is up over 240%. Meta Platforms is up over 180%. Tesla, more than 135%. Amazon, about 80%. Microsoft and Apple both are up more than 55%. And Google is the relative underperformer, up about 53%. Now, in your view, which are the best mega cap stocks to own for 2024?
Again, not investment advice, but I think Google is at the top of the list, in part because I think the street is still, investors are still generally concerned about what's going to happen to their search business when generative AI becomes more prevalent across the internet. We think that it will be in a good spot. Second is Apple. I think what we talked about with them talking more about generative AI next year, and separately what Vision Pro could do, and just general this safety net of what is a steady 5% growth in the iPhone business. That is a steady eddy, and I think it's going to do well in 2024. And the last company, one that's more controversial, is TSMC, and this is Taiwanese semiconductor manufacturing, and they are the company that basically fabricates the chips for Apple and Nvidia, and Google makes chips, and since they're the most advanced chip manufacturing. The issue, of course, with investing in TSMC is that it is a Taiwanese company and you have significant geopolitical risk. We're able to set aside some of that geopolitical conversation, because if that does happen, the whole market's going to be in a tough spot if China invades Taiwan. But separately, is TSMC has been diversifying some of their manufacturing outside of Taiwan. Call it by the end of next year, about 50% of their production will come from outside of Taiwan. So those obviously would continue to produce. And so we think that TSMC is a great way to invest in AI, along with Google and more increasingly Apple.
Great picks. So Google, Apple, and TSMC. TSMC is one of the most important companies in the world. And in fact, Warren Buffett had invested in the company, but they exited the position quickly, mainly because of the geopolitical risks, and hopefully elections in Taiwan will bring some clarity on the situation. But yes, it's a great company and it could be a great pick. I totally agree with you. Now let's talk about emerging technology stocks. These are smaller technology companies, and these have been outperforming the QQQ, the Qs, over the past few weeks. And that's mainly because other risk assets are also surging on hopes that the Fed will start cutting rates early 2024. And in fact, the market is currently pricing in about 150 basis points of rate cuts next year. And if the economy remains resilient and inflation continues to decline, then that will benefit these smaller technology companies too. So could you talk about the recent outperformance, and do you think that could continue in 2024?
I think it will in 2024 and 2025. And we at Deepwater believe that this is going to be the asset class that's going to perform the best. And your setup was spot on. There's been a more of a opportunistic view from investors recently just around the rate expectations and getting into more of these, quote, riskier, smaller companies. And the question about interest rates does impact these companies. We may or may not get that the rate cuts that the market is expecting next year, but eventually we are going to get them. And I think the probability that rates go higher is low. And to me, that environment, even though it might miss in the near term, there may be inflation or interest rates that are higher for longer. In the near term, eventually they will decline. It might be late in 24, it might be in 25. But as the market starts to fully embrace that rates are going to move down and stay stable, I think you're going to get this movement back to these emerging companies. And I think that some of the darlings of 2021, I think are going to see a move higher in 2024 and 25. And at our Deepwater Frontier Tech ETF that's powered by Innovator, I see that as a vehicle that really capitalizes on the smaller, if you will, a lot of companies in there in the sub $50 billion market cap that I think will do well in a stable or declining interest rate environment.
So let's talk a little bit more about the ETF. As you mentioned, it is the Innovator Deepwater Frontier Tech ETF. The ticker symbol is LOUP, L-O-U-P. Please talk about the investment philosophy behind this ETF.
So we want to find companies that are less well-known. So we're not invested in the Magnificent Seven, but we also want to find companies that are going to transform how we live our lives over the next 5 years. And we generally think about them in a few categories, including artificial intelligence. That's about half of the portfolio. Autonomous vehicles, that's about 10%. There's virtual and augmented reality, that's about 20%. And robotics and fintech. But think of this as really AI and autonomous vehicles and also the spatial computing, this augmented reality piece. And so that's our mandate, is to find which companies that are less well known are going to grow faster for longer and really be these transformative companies. And so an example of a company that some may know, but not all that is owned in the ETF is MBLY. This has computer vision. It's a $34 billion market cap. So it's a sizable company, but it's clearly not a mega cap. Or for example, SK Hynix, they do chip manufacturing. They compete with like Samsung. That's in there as well. And so that's the focus on the ETF, is really investing in AI and autonomy with companies that aren't as obvious as owning the Magnificent Seven.
I'm looking at the top holdings in this ETF, and there are many companies that I'm not familiar with. You mentioned MobileEye and SK Hynix. There are other companies also. There are some foreign companies in the ETFs. So could you talk about some of the top holdings that you like the most and our listeners may not be familiar with?
Yeah, some of them are a little bit bigger. Again, we're not in the Magnificent Seven, but companies like ASML. So ASML, they make the machines that are used by chip fabricators like TSMC to build chips. So it's the machine, they sell the machines that build the chips. And ASML, we think, is a great opportunity that's going to capitalize on really the growth of the silicon and the hardware part of artificial intelligence. Another is, we've talked about TSMC. That is a little bit of a bigger company, but also benefits from the chip piece. AMD is another example of a company. One that many may not know is Unity Software. This was a darling in 2021, and they build essentially today assets that go into games. They're the second largest software provider that allows creative people to build these assets. The largest is Epic Games, the Fortnite provider. But Unity has an opportunity not only to build for the gaming community, but as we see this playing forward, is an opportunity to build assets for the spatial computing. That's that Vision Pro that we talked about with Apple. And we think this is going to be a new paradigm in terms of how people interact with computers, bringing the physical and the virtual worlds together. Those virtual worlds, the assets of those virtual worlds are built by Unity.
Excellent stuff, Gene. We'll leave it there. Thank you so much for joining us today and for sharing your insights.
Thank you. Talk to you soon. That
was Gene Munster of Deepwater Asset Management. Let's recap some of the tickers that we discussed. So Nvidia is NVDA, Meta Platforms is META, Tesla TSLA, Amazon AMZN, Microsoft MSFT, Apple AAPL, Alphabet or Google is GOOGL. Then among his top picks for 2024, he mentioned Taiwan Semiconductor. The ticker symbol is TSM. His ETF that we talked about is LOUP, LOUP. And he discussed some of the holdings in this ETF. He talked about MobileEye. The ticker symbol is MBLY. He talked about ASML. The ticker symbol is ASML. Now, he mentioned that his ETF does not invest in the Magnificent Seven stocks. It invests mainly in smaller companies. So if you want to invest in the Magnificent Seven stocks, the best ETF, in my view, is QQQM. It is the cheaper version of the ultra-popular NASDAQ 100 ETF, which is QQQ. So QQQM has a lower expense ratio of 15 basis points, whereas QQQ charges 20 basis points. This is the last episode of 2023. Thanks for listening. We'll be back in the new year with more interesting topics and more expert guests. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com. Do I need to
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.